If you just look at the prepared text he had yesterday, if you just read this, it was fine. Low inflation, subdued financial economies around the world.
If you read it on the piece of paper.
On the paper. When he speaks and when he got off script is when the market ran into trouble. And we've seen this time and time again over the course of this past year. It was in his first press conference to talk about the yield curve, diminishing the importance of the yield curve. It was in October, the offhanded comment about the neutral rate of policy, the market freaked. So I think it's not much of a surprise that every Fed day since he's become the chair, the market has declined on a Fed day. And that's the longest streak in history. And yesterday's press conference was the worst market performance on the day of a press conference since they started doing press conferences.
In your estimation, is the market over-interpreting, misinterpreting what their view is? Or do you think he was very direct and the market's getting it right?
When you're being glib or you're being, offhanded comments, the market's reading into that. That's what the actual thoughts are rather than the, massage text in the statements. So I think what we also have here is we have a market that's been looking for an excuse to sell off. In September, we had strong earnings reports and we declined on those on the good news. So time and time again, we've been seeing good news and the market's been selling off. And that's just, that's a message that the market is sending that isn't a particularly positive one.
So how much damage has been done to the markets at this point?
The Russell 2000's lost almost a quarter of its value.
It's bear market territory.
Again, coming to the press conference yesterday that the financial markets aren't going to dictate policy. Russell 2000 completely levered to the U.S. economy. It's lost a quarter of its value. So if that's not going to cause you to have some sort of pause to your policy, what is?
Back to the prepared text versus the press conference. In a modern day Fed as we have now, if you're going to give press conferences, and I'm asking your opinion on this, why shouldn't he, if he wants to be transparent, continue on trying to explain what he said yesterday? Why isn't he here right now? Why aren't we talking to him as well, saying, look, yesterday was chaotic. You want to be transparent. You're giving press. Apparently it's not going so well. As you've just said, it's a long streak of bad outcomes. Why don't you think he goes out on the road and talks a little bit more about it?
Well, I think they're showing some signs. I mean, next year they're going to do a press conference after every meeting. I don't know if that's good or bad, but they are trying to increase.
According to you, it's horrific.
Well, the way it's been going, yes. But I think they're trying to increase some of the explanation. It's just right now there's a miscommunication, I think, between the markets and the Fed chair. And when he speaks in these offhanded comments, we've seen some weak market reactions.
Algorithms on text, on what he was saying. I mean, you almost get paid to short the market when he gets to the podium now.
Yeah, like I was just saying, we've seen declines, and Fed days historically have been very positive for the market. The last 7 Fed days, the market's been down every time, and it just so happens that his first meeting is when that streak started.
Okay, let's get from the philosophical to the practical. What are you doing about all of this?
So I think, we've had, once we saw in earnings season stocks selling off on good news, you just have to listen to the message of the markets. And when the market's telling you is that it's selling off on good news or bad news, so you have to take a more cautious stance. And until you start to see some signs of, market rallying, being able to close at the highs of the day, rather, we've closed at the in the lower range of the day for 7 straight days. That hasn't happened since 2016. And the way the market's been closing, selling on strength, the ways you can look at it, it's the weakest we've seen in this bull market.
What are some of the sectors, or what are some of the stocks that you're looking at most closely? I mean, I saw yesterday you're flagging Amazon, and a lot of technical analysts are taking a look at Amazon and saying, you know what, we break some key levels, and there's a huge air pocket, and we could go down by a tremendous amount. We closed below 1,500 on the stock in yesterday's session, so that's sort of key.
Yeah, I mean, well, Amazon's had a huge run. If you look at a long-term chart of it, it doesn't even look like that much of a move right now. The semis had been holding up well, so you want to watch that. You want to look for the stocks that were the leaders on the way, leading the market on the way down. So home builders, you want to look for some signs of stabilization there. Semis again, and even some of the FANG stocks. Facebook was one of the first to go down, and see how that starts to react. Yesterday was a really bad day, but the low is in the mid 120s. So watch that going forward in the next few days.